is down in Rhode Island, a very supply constrained area. It's very hard to develop there. There's not a lot of land. There's not a lot of cheap land, and the zoning's difficult. We're buying that asset. It's only 14,000 square feet. We're buying it for $1 million, close to $1.1 million. Our total cost basis is almost $1.5 million. Got a lot of improvements to do on this asset. I'll pull them up here on the second half of the video. We'll look at the physical assets and in turn add value over 5 years. We're projecting to sell the facility for $2.2 million. So large profit on this, where we would be generating, well, $600,000 or so in profit, but we get great rents. That's the key here, is that we are able to achieve $26 rents. And that is what we're going to be doing, is raising those rents over time. And that'll generate close to a 20% return on the fund level, and a very stable asset, though. We like it because it's already full, and all we're doing is kicking out the bad tenants, putting in the good tenants, and raising. We invest the $525,000 over the life of the investment. The equity multiple would be 2.3 times that. So you return your capital back, included in that 2.3 times the equity invest. So here's a Warwick, Rhode Island facility. It is near the airport in the heart of town here, right outside of Providence. A very dense area, strong demand for storage, lots of housing, lots of apartments, not a lot of room to build. And this facility is typical mom-and-pop homes, great location, right off one of the main thoroughfares in town. And you have just a rough-looking facility that you got to fix up here. So good-looking signage, we'll get that changed, but we're really going to go in here and paint it. But it's going to be improving a little bit of the buildings, maybe improving some of the doors. And the whole thing with this one is just marketing it effectively. You see, we're off the main road, so we want to be sure that we get the right marketing in our Google, and that's the key. So it's not really per se needing to do a lot of physical improvements. Since then, it's partially been paved, and we'll be paving the rest of it. Looking at these roofs, we got a roofing study and making sure that the roofs are going to be fully operational. But getting traffic into the site, that is the key. So that's going to be marketing, spending more on marketing. Every dollar on marketing generates NOI, which creates a huge multiple and adds a lot of value to the asset. We'll keep you up to date on good acquisitions. We're being very disciplined here at Patriot, being very conservative on the assumptions of selling these properties at fair cap rates, at a 7 cap rate. So we're not getting too aggressive and thinking that we're going to be able to sell them at an extremely low cap rate like we could back in COVID. And then also we are being conservative on our rents, because if we miss on rents, then you can't achieve any of this. So we want to make sure that we provide our customers affordable rents. I'd love to talk to you anytime you have any questions. Go to patriotholdings.com, set up a call with myself, Shane, Jeannie. We can all talk to you about the Patriot Fund V, and we can go over these assets individually. We can go over the PPM, the offering memorandum, any of the documents, and we also offer really good tax benefits where we are giving all of the depreciation to the limited partners. Plus, I'll have $1 million invested in this fund, like I have every fund before that. So me as the sponsor, as the GP, is heavily invested in making this successful, and I also personally guarantee the majority of the loans in the fund, like these loans here, because the local banks offer the most competitive terms for these smaller storage facility assets that are value add up in this region. So we have really good relationships with these banks, and they fix their debt anywhere between 6 and 7.5% interest rates, depending on the project. And based on where we're buying right now, that still allows us to get a strong yield for investors in that 7 to 9% range, cash on cash return. So thanks again. Look forward to talking with you and meeting you. And we're going to get back to it and keep finding good deals and putting them in the fund and generating these returns for our investors. So thanks for following along.